Welcome to the deep dive. So, imagine this.
Yeah.
A really traditional industry, right, like cement. And one of the big players suddenly says their net profit nearly doubled. Doubled in just 1 year.
Yeah, and what's really striking is that it's despite, a pretty tiny bump in revenue.
Exactly. How does that even happen?
Right.
And what does it tell us? Not just about the company, but maybe the whole sector, even the economy.
Well, that's what we're digging into today.
We are taking a deep dive into Shree Cement Limited's latest numbers, the results for the quarter ending June 30, 2025.
Mm-hmm. And our mission here really is to get past those big headlines. We've got their official press release, the detailed financials.
We've got the listener questions, too.
Yep. And we're going to break it all down, pull out what really matters, and basically give you the shortcut to understanding what these figures actually mean.
Yeah, why they're important and what they signal about the market, maybe even future trends.
Let's do it.
Okay, I'm genuinely curious. Because seeing a 95% jump in profit after tax, PAT, going from about 318 crore rupees last year to 619 crore this year.
That's roughly 38 million US dollars to what, $74 million? It's huge.
It's a massive leap. So what else jumps out from those initial top-line figures?
Well, it's also how their operating profit, their EBITDA, that also climbed really nicely, up 34% year on year.
Okay.
From about 916 crore to 1,229 crore rupees.
Right, so around $110 million to $147 million USD there.
Exactly. And cash profit saw a good jump too, 24%, hitting 11,161 crore.
But the really fascinating part, like you said, is that this huge profit surge happened while net revenue from operations only edged up by 2%, just 2%, hitting about 4,948 crore rupees, or maybe $594 million USD.
Yeah, that disconnect is what makes you look closer.
Okay, so nearly doubling net profit on a 2% revenue rise. I mean, that sounds almost like magic in an old school industry like cement.
The MD, Mr. Niraj Akhoury, he talked about, resilience and dedication. Standard stuff.
Right, the usual management commentary.
And what's really going on? What market shifts or operational tweaks could actually make that kind of difference between revenue and profit? That's the key question, isn't it? When you see numbers like this driven internally, it points to a couple of big things. First, like you suspect, really tight cost control. They're squeezing more profit out of every single rupee of revenue.
Okay.
Makes sense. Second, it strongly suggests a strategic move towards higher margin stuff. Maybe better pricing power, maybe more premium products in the mix.
So not just selling more, but selling better stuff maybe.
Exactly. So for you listening, this signals that Shree Cement isn't just benefiting from a good market, they're actively driving profitability through smart internal moves. That's a powerful sign.
Okay, the financials look impressive, definitely. But how are they actually achieving this? Let's get into the operations. What's driving that efficiency? What about sales volume and those premium products you mentioned?
Right. So total sales volume for the quarter was 89.5 lakh tons.
Which is nearly 9 million metric tons. That's a lot of cement.
It is. But, what's maybe more revealing is the mix, that premium product share. It climbed to 17.7% of their trade sales volume.
Up from 15.6% the quarter before.
Yep.
That's not accidental. It shows a deliberate and apparently successful strategy to sell higher value products. Selling smarter, like you said.
That premium focus makes sense for boosting margins. But they're not just changing what they sell, they're also expanding where. They're really pushing into ready-mix concrete, RMC.
Oh yeah, aggressive.
Started the year with 15 plans, already added 6 more. So they're at 21 now.
And the target is 50, 50, by the end of this financial year.
Wow, 50 RMC plants. That tells you they see a massive runway there.
Absolutely. It's a clear play to diversify and integrate more into the construction value chain. They want to capture more of that market spend. So for you listening, this isn't just about building more factories. It's about building a bigger ecosystem, becoming a more complete supplier for construction projects.
Precisely.
Okay, so strong moves in India. But this isn't purely a domestic story, is it? Their overseas performance, especially in the UAE, that's another interesting piece.
It really is. UAE operations saw revenue grow 19% year on year. That's about 181 million dirhams, or maybe $49 million USD.
Okay, decent growth.
But hold on, the operating profit, the EBITDA over there, it surged by an incredible 397%.
Oh, nearly 400%.
Yeah, from around 9 million dirhams to nearly 45 million dirhams year on year.
So that's like $2.5 million USD up to over $12 million USD. That's astonishing.
It really is. It suggests, maybe a very different market dynamic there, or perhaps they've just nailed a really effective strategy specific to the UAE.
And that success is fueling more investment, right? Their subsidiary, UCC.
Union Cement Company, yeah. They're planning to add 3 million tons per annum of capacity, investing about 110 million dirhams, maybe $30 million USD.
Driven by that strong demand. It shows real confidence in that market. They're not just expanding, they're doubling down where growth and profits are high.
Exactly. And it's not just abroad. Back home in India, the expansion plans are just as ambitious.
Right, those ongoing projects. Integrated units in Jataran, Rajasthan, and Kodla, Karnataka, both adding 3 million tons per annum each.
And once those are up and running, their total capacity hits 68.8 million tons per annum.
And that feeds into their bigger goal, doesn't it? They're aiming for 80 MTPA by 2028.
Correct. They're constantly looking for ways to hit that 80 million ton mark. It really underlines their long-term ambition to capitalize on India's infrastructure story.
Okay, so we've covered the market moves, the expansion, but these days, especially for a company like Shree Cement, it's not just about volume or profit, is it? It's how they make it. And their sustainability efforts, honestly, they seem pretty significant.
They really do stand out.
When I saw their green electricity numbers, I was genuinely taken aback. 65.65% share of green power in their total consumption for Q1.
That's huge for cement. It's an energy-hungry business, and they specifically note it's one of the highest in the Indian industry.
Plus they have, what, 586 megawatts of green power generation capacity themselves?
Which is massive. And, this isn't just about looking good. Using that much green power means less exposure to volatile fossil fuel prices. That helps stabilize costs, boost profitability.
Good point. It's smart business too.
And potentially a draw for customers who care about sustainability.
Then there's their waste utilization. Using agro waste, 0.15 lakh tons of it. Save fuel, cut CO2.
And they specifically mention using thousands of tons of stubble near Delhi, which is a big environmental issue there.
Right. And they also used over 0.5 lakh tons of hazardous waste as fuel.
Again, it's not just waste disposal. It's turning waste into a resource, a fuel. That's circular economy thinking, and it directly cuts their fossil fuel bill. For you listening, that signals a really sophisticated approach to cost management.
And water. This one really impressed me. All their plants are zero liquid discharge. They treat and reuse 100% of their wastewater.
Which is incredibly hard to achieve, especially in heavy industry like cement.
Their water positivity index was over 8 times last year, and they want to improve it. In water-stressed regions, that's a huge operational advantage.
It absolutely is. It's future-proofing, and these efforts get noticed. Their Raipur lab got NABL accreditation.
Making its test results globally accepted, important for quality, maybe exports down the line.
Definitely. And they picked up awards, too. Most sustainable company in the cement sector from Business Today.
Plus that Bhamasha Award in Rajasthan for education work.
Yeah.
The Rose Unit won it for the 10th year straight.
10th year. That's remarkable consistency. It really validates their efforts on both the environmental and social fronts. They're building a reputation for responsible leadership, not just financial muscle.
Okay, so it's clear they're building this reputation for responsible growth. But let's bring it back to the core financials. How does all this operational skill and green focus translate to balance sheet stability? Let's look at those key ratios.
Right, the bedrock numbers.
Their debt-to-equity ratio in Q1 was incredibly low. 0.04. What does that tell you, the listener?
0.04. It means they have almost no debt relative to their equity. They're funding almost everything themselves, not borrowing heavily.
So very low financial risk.
Extremely low. It means they aren't weighed down by big interest payments. It gives them enormous flexibility for future moves, investments. Think of it like having almost no mortgage. Huge financial freedom.
Yeah.
Very conservative, very stable.
Makes sense. And their current ratio. 2.02 in Q1. What's that signal about short-term health?
Yeah, 2.02. Basically, for every dollar they owe in the short term, they have over $2 in easily accessible assets to cover it.
Like having double the cash needed for your immediate bills.
Exactly. It means they can handle unexpected costs or short-term needs very comfortably. Plenty of liquidity.
And profitability. We saw the PIP jump, but what about margins?
Pretty healthy. Operating margin at 29%, net profit margin at 13% for the quarter, shows good efficiency in turning revenue into actual profit.
Okay, and we should probably briefly touch on how they structure their borrowing, even if it's low.
Yeah.
The secured debentures.
Right, the 7.8 EBIT% secured, redeemable, non-convertible ones. The key part there is secured. They're backed by specific property.
meaning less risk for the lenders.
Yep, tangible collateral. It points to prudent financial management, locking in stable borrowing costs when they do borrow.
And just for clarity on the reports themselves, these results were approved by the board, reviewed by auditors. They provide both standalone figures and consolidated ones.
Which is important because the consolidated numbers include subsidiaries like the UAE business, Shree Global FZE, Union Cement Company, gives you the full group picture.
Right. The notes also mention some subsidiary accounts were reviewed by different auditors. Some weren't reviewed, but management deemed them immaterial. Standard stuff for complex groups.
Which brings us nicely to the bigger picture, the outlook for the Indian cement market itself.
Yeah, what's the context for Shree's performance?
Well, the forecast is pretty positive. The Indian cement industry is expected to grow by about 6–7% in this financial year, FY26.
Solid growth. What's driving that?
A few key things. Strong government spending on infrastructure, that's a big one. Rising demand for housing, especially in rural areas, helped by expectations of a good monsoon.
Urbanization, too, presumably.
Absolutely. Plus just general industrial and infrastructure activity picking up pace.
So the overall feeling is pretty upbeat for the sector.
Generally, yes. The consensus seems to be that the industry is heading into a, quote, stable and profitable phase ahead.
Okay, sounds good. But any potential clouds on that horizon? With all this expansion, is overcapacity a risk? Or maybe external shocks, like energy prices going wild again?
That's always the balancing act, isn't it? Expansion versus demand. Right now, the projections suggest demand, especially fueled by government infra projects, should absorb the planned capacity increases across the industry.
Okay.
But you're right to flag risks. A major spike in global energy costs would definitely hurt, as it's a huge input for cement makers. Unexpected policy changes could also be a factor.
So not guaranteed smooth sailing, but the underlying trend looks positive.
That seems to be the view. Barring major shocks, the outlook appears stable to positive for players like Shree Cement.
Okay, so wrapping this up, we've got this picture of Shree Cement. Really strong financial performance. That near doubled profit is the headline.
Driven by efficiency and premiumization, not just revenue growth.
Right. And they're expanding strategically in RMC, in the UAE. And crucially, they have this deep commitment to sustainability, the green power, waste reuse, water management.
Which isn't just good PR, it seems baked into their operational strategy and cost control.
So putting it all together, what's the key takeaway for you, the listener, trying to understand market leadership here?
Well, we're seeing a company that's firing on multiple cylinders. Strong financials, smart expansion, and a serious commitment to ESG principles in a traditionally heavy industry.
Which leads to maybe a final thought to chew on.
Yeah, consider this. As India keeps building, keeps growing its infrastructure, how might companies like Shree Cement ones that manage to blend profitability with serious green credentials, how might they actually reshape what progress even means for these foundational industries, not just in India, but globally?
That's interesting. What new challenges or maybe opportunities pop up when industrial growth and environmental responsibility really start to merge like this? Could this become the new benchmark for heavy industry worldwide?
Something to think about, definitely.